Higher for longer. The mantra none of us really want to start chanting, but are all learning to accept. And possibly the truest words ever spoken by Jerome Powell. I recently gave a 2025 forecast on what I see happening in the real estate market this year at our Smarter Hour event. If you missed it, I'll be doing a recap on Property Pursuits, our monthly market update next week. You can join us live, or you can catch the recording wherever you get your podcasts. There are some interesting trends that you're going to want to keep tabs on this year. Everything from how AI could solve the housing crisis shortage, and the new wealth effect, and specifically how it will impact 18 to 29-year-olds, and then, of course, interest rates. Spoiler alert, they are expected to stay in the sixes throughout this entire year. The Fed has forecasted a slower pace of rate cuts on their federal funds rate. We have an inflationary president taking office, and the labor market hasn't slowed enough, or the data we get on it hasn't slowed enough. So how does one navigate this new era of limited inventory, higher but stabilized home prices, and less than inviting borrowing costs? We're going to share specific tips to impact your strategy for sellers and buyers on Property Pursuits. But for now, I want to share or highlight who I predict will be the winners in this new marketplace, the savers for sure. High interest rates sounds bad all around, but they definitely aren't bad news for high yield savings accounts, money market funds, CDs. While borrowing costs are at their highest level in 22 years, that means savings returns are looking pretty damn good. This means if you have any sum of money and save it in the right place, your efforts will be rewarded better than they have been recently. For reference, in 2020, you earned 0.5% back on your savings, whereas now you can earn between 4 and 5% on your savings balance. I highly recommend SoFi because online banks are going to pay a better savings return than your brick and mortar banks like Bank of America. The other winners are going to be savvy sellers. This trend will continue from 2024, where we saw homes that were prepared properly to be listed went quickly, while others sat for weeks. Price reductions, terms that they weren't exactly favorable to the seller. It was a clear distinction. If the home was priced properly and prepared properly, it went often in a bidding war. Sellers should understand where to focus their efforts when it comes to preparing the house for listing, from home improvements to appropriate pricing. And of course, a good realtor will help you do that, right? I also read an interesting article in the Wall Street Journal. I'll link it because it shared which home investments actually get the best return for the seller. The other winners are going to be the second or even third time homeowner. Those who are moving up to a bigger home, or even moving down, or downsizing I should say, have an obvious upper hand in this market. They're less freaked out by the higher interest rate climate because they're familiar with a few key points. The first being that you will rarely think about your interest rate after closing, as long as you have the proper strategy in place to deal with your monthly payment. 2, refinances are not this big, overwhelming task. They're mostly painless and really quite common. And the third thing they know is that buying a home will not ruin your social life. You'll still be able to travel. You'll still go to your music festivals. Life will go on. You'll just have a housing expense like you already do now. The main advantage all of these buyers have is that they are also sellers, right? And they're leaving with a significant amount of proceeds to use as a down payment on their new house, whether they're moving up or down. While our team helped a ton of first-time home buyers in 2024, the second largest demographic of buyers we helped were move-up buyers, using their equity to buy their forever home, which was an amazing thing to be a part of. Some save the dates for the new year. Coming up on Valentine's Day, February 14th, we have Mortgage and Mimosas. You can also now grab your early bird ticket or table sponsorship to The Future is Female. That's going to be March 6th, and we are doing a very special theme this time. We've always focused on empowering women as real estate investors, but this time we're going to expand that to empower women in all areas of wellness. So I'm very excited to have topics about physical and mental health, perimenopause. We're going to be talking about financial wellness, of course, but it's definitely one you won't want to miss and one you're going to want to invite all of your friends to, not just your real estate besties.